Welcome to the Wall Street Legend. I am Jesse Livermore, trader, speculator, and student of the market's eternal truth. Today, I'll share the timeless principles that made and broke fortunes, the same principles that still decide who survives and who vanishes in modern markets. Let's begin. A century has passed, yet the market hasn't changed not one bit. The screens are faster, the numbers brighter, but the human heart behind every trade still beats with the same fear, greed, and hope I saw in 1907. You think the game is new? You're wrong. The rules I lived by then are the same rules that will decide your fate today. The question is, will you listen before the market teaches you the hard way? The market is never wrong. Opinions are. That is the first truth every trader must learn, and the last truth most ever understand. You can sit in front of your screen armed with indicators, forecasts, and endless news feeds, and still lose everything if you cannot accept that the market does not care what you think. In my time, I didn't have your computers or data terminals. I had the ticker tape, a thin strip of paper spitting out prices, line after line, heartbeat after heartbeat of the market. And yet, even with so little, the lessons were the same. The ticker told me everything I needed to know, not through numbers alone, but through rhythm. The tempo of buying and selling, the pulse of fear and greed. The market speaks a language of movement. It tells stories through its behavior. It whispers first, quietly, almost imperceptibly, and only later does it shout. By the time the crowd hears the scream, the wise trader has already acted. That is why opinions are dangerous. You may convince yourself that a stock is cheap, that it should go up, that the market must realize its value. But the market owes you nothing. It is not a moral system. It does not reward logic or punish foolishness. It simply reflects the sum of human emotion expressed in price. And emotion, not reason, drives markets. When prices rise, people grow confident and call it wisdom. When prices fall, they panic and call it manipulation. But it is all the same force? Collective psychology repeating itself over and over through generations. You must learn to listen, not to what you want to hear, but to what the price is actually saying. In my early years, I would stand in bucket shops for hours, watching the tape, reading each change, each flinch in price. I wasn't trading for money, I was studying behavior. Each uptick, each reversal carried meaning. I began to sense when a move was genuine and when it was weak, when smart money was entering and when the public was chasing. That instinct, developed through observation, became my greatest weapon. Today, you call it tape reading or price action. But in truth, it is the art of listening, the skill of interpreting emotion through motion. Most traders don't listen. They argue. They impose their beliefs on the market. They tell themselves that a stock must bounce because it's oversold or must fall because it's overbought. They find comfort in patterns and theories, but they ignore the only signal that matters, price. The market doesn't care about your support lines or your confidence. It moves where it wants, when it wants, because it represents millions of decisions colliding at once. And that force is bigger than you, me, or any analyst who claims to know what will happen next. In my lifetime, I saw fortunes made and lost because of this single mistake, refusing to listen. I remember traders who would insist they were right as their accounts blood dry. They would call the market crazy, unfair, manipulated. But it wasn't the market that was wrong, it was them. The market was merely revealing truth, and truth is often painful. A trader who cannot admit when he's wrong is doomed. The ticker exposes pride faster than anything in life. You might deceive yourself for a time, but your account balance will always speak the truth. There is freedom in accepting that the market is always right. Once you surrender your ego, you stop fighting. You begin to see what is, not what you wish it to be. You become a student again, alert, patient, observant. You learn that every tick carries a message, that each movement holds information. A sudden burst of volume, a shift in volatility, a change in character. These are not random. They are the whispers of opportunity. But you will never hear them if your mind is loud with opinion. Think of the market as the ocean. You cannot command the tide. You cannot demand that a wave rise when you wish to surf. You can only study the current, sense the swell, and move when it moves. The great traders, the ones who last, understand this. They flow with the market, not against it. They respect its power. They adapt, and that respect becomes their survival. In 1907, during one of the great panics, I watched stocks collapse across the board. Panic everywhere. Yet amid the chaos, there was rhythm, patterns of exhaustion, sudden reversals, waves of short covering. The crowd saw fear. I saw opportunity. I had no inside information, no guarantees, just the ticker, whispering. And because I listened, I profited while others perished. That is not luck. That is alignment with truth. Today, your markets move faster, but the principles remain the same. The screens may be digital, but the emotions behind them are still human. Fear, greed, hope, despair. They have not changed in 100 years. Technology evolves, psychology does not. That is why the same patterns appear decade after decade. The same mistakes repeat, just at higher speeds. The trader who understands this has a timeless edge. So the next time you look at a chart, silence your opinions. Do not ask what you think should happen. Ask what the market is telling you. Are prices rising on heavy volume or drifting on light participation? Are reversals violent or calm? Is the crowd confident or uncertain? These clues are everywhere, but only visible to the trader who listens. If you learn to read the market's behavior without bias, it will reveal everything you need to know. Remember, the market is not your enemy, nor your friend. It is a mirror reflecting the truth of collective behavior. To survive, you must observe without attachment. To profit, you must act without emotion. When you stop arguing with price, you stop losing to yourself. That is the first and most eternal principle of successful trading. The market is never wrong. Only the trader who refuses to listen is. The biggest money I ever made was in the waiting. Not in the buying, not in the selling, but in the waiting. That may sound simple, but it is the hardest thing for most traders to learn. Waiting requires discipline, and discipline requires character. Anyone can place a trade. Anyone can click a button, but very few can sit through the silence between action and reward. Most traders today mistake movement for progress. They chase every flicker in the market, convinced that constant activity means opportunity. But in truth, the market rewards the man who can be still, who can endure the boredom between great moves without being tempted by the noise of small ones. When I first began trading, I wanted to be in the market all the time. I felt that if I wasn't trading, I was missing out. I'd jump from one position to another, buying and selling every fluctuation. And for a while, I even made money. But I was learning the wrong lesson. I was confusing luck for skill and movement for mastery. Then the market taught me the truth, through loss. I realized that the big money was not in the constant action, but in identifying the right moment and having the patience to let it unfold. The market doesn't pay you for effort. It pays you for timing. Every great move I ever caught began the same way, with patience. I would study a stock for days, sometimes weeks, watching it move, feeling its rhythm. I'd wait for confirmation, for that subtle shift when the balance of power turned. When the tape whispered that the path was clear, I acted, not before. Once in, I did nothing. I sat tight. That is where the real challenge begins, because sitting tight goes against every instinct a trader has. The market moves, your profits fluctuate, and every tick tempts you to act. You start to imagine you could do better, that maybe you should take profits early, or maybe add more, or maybe hedge. All those thoughts are traps laid by impatience. The hardest lesson in speculation is that the market does not move on your schedule. It moves when it is ready, not when you are. Impatience is the most expensive habit a trader can have. It's a silent thief that robs you of great opportunities. I have watched countless traders ruin perfect positions simply because they could not wait. They needed excitement, constant confirmation, or action to feel alive. But trading is not about feeling alive. It's about staying alive. Every time you act out of boredom or restlessness, you trade discipline for distraction. The market doesn't forgive that trade. There were days when I would sit in my office with no position at all. Nothing met my criteria. The temptation to trade anyway was immense. The noise of the market would whisper, "Do something, you might be missing out." But experience taught me that doing nothing is sometimes the most powerful move. If you cannot find a setup that meets your rules, your job is to wait, not improvise. Great traders are not hunters of opportunity. They are trappers. They build the conditions, set the bait, and wait for the market to walk into their plan. The waiting is what separates professionals from gamblers. Gamblers chase, professionals prepare. Patience is not passivity, it's strategic inactivity. It's knowing when not to act because you understand that conditions are not yet right. Think of the farmer who plants seeds. He doesn't dig them up every day to see if they've grown. He tends the soil, waters the ground, and waits. The market is no different. You plant your trade, your idea, your setup, and then you wait for it to mature. That's how you make fortunes. When I held my biggest winners, it was never comfortable. The crowd never agreed with me. I often sat through weeks of doubt, with others calling me foolish or lucky. But I stayed, because my plan had not changed and the market had not reversed. I had learned to endure the discomfort of patience. Most traders crave the comfort of activity. They want to feel in control. But patience often feels like surrender, like you're doing nothing while the world moves on without you. Yet, paradoxically, that surrender is where mastery begins. To be patient is to have faith in your method, your preparation, and your understanding of the market's rhythm. When the big move comes, it doesn't announce itself. It unfolds gradually, then suddenly. The impatient trader misses it because he's too busy chasing smaller swings. But the patient one, the one who waited quietly in position, captures it fully. He doesn't need to predict every fluctuation. He just needs to be there when the real move happens. The market rewards courage, yes, but only when that courage is paired with patience. Acting too soon or exiting too early is the death of compounding gains. Remember this, there is no money in constant motion. The market doesn't care how many trades you make. It doesn't pay you for effort, it pays you for correctness. And correctness often means sitting through long periods of nothing, waiting for confirmation, holding through uncertainty, resisting the urge to overtrade. The discipline to wait is a trader's greatest weapon. In 1929, before the crash, I had already seen the warning signs. The market's tone had changed. The tape felt heavy. Distribution was everywhere. But the crowd was euphoric. They wanted action, and they got it. Until the tide turned, I waited. I positioned myself early and then sat still as the panic unfolded. Others were scrambling, reacting, selling in fear. I simply watched my plan play out. That patience turned into one of the greatest trades of my life. I didn't need to trade every day. I only needed to be right when it mattered. The irony of trading is that the more you do, the less you earn. The best trades are rare, and they take time to develop. The noise between them is just temptation disguised as opportunity. Every time you jump too soon, you cut your future short. You rob yourself of the chance to experience what true compounding feels like. That feeling when the market finally aligns with your conviction and rewards your restraint. So, learn to wait. Let others chase the illusion of constant profit. Let them trade every move, react to every rumor, exhaust themselves in the pursuit of action. You must be different. You must have the strength to do nothing when nothing should be done. Because when your moment comes, when the market aligns with your preparation, you will move with precision, not impulse. And when that move rewards you, you will understand why the greatest money is not made in buying or selling, but in the waiting. Speculation is not a game, it is a profession. The most demanding and unforgiving profession in existence. It punishes arrogance, rewards patience, and shows no mercy to the careless. Those who treat it as a gamble end up like gamblers always do, broke, bitter, and blaming luck. But those who approach it as a business, with structure, calculation, and discipline, discover that speculation, when mastered, is one of the purest expressions of logic and self-control. In my time, I watched crowds of men flood into the bucket shops and brokerage houses, their eyes bright with greed, chasing the dream of quick riches. They believed that the market was a game of chance, that with a little luck or a good tip they could turn a few dollars into a fortune. Most of them never lasted. The market has no sympathy for wishful thinking. I learned early that speculation was not about luck or guessing direction. It was about understanding probability, risk, and timing. It was a business, and like any business, it required capital, strategy, and discipline. When you treat speculation as a business, your goal changes. You no longer ask, "How much can I make?" but instead, "How much can I afford to risk?" The difference between those two questions is survival. The amateur focuses on profit, the professional focuses on preservation. In business, you don't wager your entire capital on one opportunity. You manage expenses, control losses, and build gradually. Speculation is the same. Every trade is an expense of capital, and your goal is to spend wisely. You must think like a businessman protecting his assets, not a gambler chasing thrills. The gambler hopes to win, the speculator plans to win. A gambler throws dice and waits for luck. A speculator waits for confirmation, acts on probability, and manages outcomes. That's why I always said, the big money is not in the buying or the selling, but in the waiting. Because business requires patience. A gambler's excitement ends in hours, a businessman's reward builds over months or years. When you see trading as business, you replace emotion with process. You develop systems. You record your results. You measure your progress by consistency, not excitement. Most traders lose because they treat the market as entertainment. They crave action, the thrill of winning, the adrenaline of risk. They are not investors, not speculators. They are emotional participants seeking stimulation. They trade out of boredom, not conviction. They don't study their results or refine their methods. They just keep playing, hoping that luck will favor them next time. But luck is a cruel partner. It tempts you with a win and destroys you with the next loss. When I say speculation is a business, I mean that every decision must be rooted in logic and backed by evidence. Every trade must have a reason to exist. I used to say that successful speculation is built on 3 pillars: knowledge, discipline, and capital. Lose any one of them and your foundation collapses. Knowledge means understanding how the market moves, recognizing the patterns of human behavior that repeat endlessly. Discipline means following your plan even when your emotions beg you not to. And capital, that's your lifeblood. Without it, even the best plan is worthless. Protect your capital as a merchant protects his goods. Guard it with caution, because the market will always test your defenses. A businessman keeps records. He knows his expenses, his profits, his margins. A trader should do the same. You must know what works for you and what doesn't. You must analyze every trade, not just to celebrate wins or mourn losses, but to understand your process. The trader who learns from his trades is a professional. The trader who only reacts to them is a gambler. Every mistake carries tuition, every success carries a blueprint, but you can only extract those lessons if you treat trading as a business and yourself as its manager. In a business, risk is managed, not avoided. There is no such thing as a risk-free venture, but there are smart risks and foolish ones. The smart trader risks only what he can afford to lose, and only when the odds favor him. The foolish trader risks everything because he's blinded by greed. When I entered a position, I always knew exactly how much I was willing to lose. I never averaged down because that was the habit of gamblers who refuse to admit defeat. In business, you don't double your losses hoping the market will change its mind. You cut the failing venture, preserve capital, and move on. Pride has no place in speculation. One of the hardest lessons I learned was that success in speculation comes from doing less, not more. The great opportunities are few, and the time between them is long. The businessman understands this. He doesn't force profit out of thin air. He waits for real demand, for real opportunity. The gambler, on the other hand, cannot wait. He must act constantly. That compulsion to be in the market all the time is what destroys him. The business of trading is not about constant action, but about consistent preparation. The profits come when preparation meets opportunity, not before. Speculation is also a test of character. The market doesn't just test your methods, it tests your values, your patience, and your ego. It exposes every weakness you have. The gambler blames the market when he loses. The businessman blames himself. He asks, where was my process flawed? What rule did I break? That self-accountability is what transforms a trader into a professional. You must learn to separate your identity from your results. A losing trade does not mean you are a failure, just as a winning trade doesn't make you invincible. What matters is whether you followed your business plan. Throughout my career, I witnessed men who made millions and lost them again because they forgot this truth. They began as speculators, disciplined and precise, but success made them careless. They started to gamble, to overtrade, to think the rules no longer applied to them. The market corrected them swiftly. No business, no matter how profitable, survives arrogance. The moment you think you're bigger than the market, it humbles you. That's why I always said the greatest danger to a trader is success, because success tempts you to forget what made you successful. Treat speculation as you would treat any serious enterprise. Study your craft, master your temperament, protect your resources, and execute your plan with clarity. Never trade for excitement, and never let hope replace analysis. Hope is for gamblers. Strategy is for professionals. The market is a battlefield of intellect and patience, not luck and emotion. The speculator who approaches it as a disciplined businessman will always outlast the crowd that chases fortune without foundation. Remember this, the market rewards those who respect it as a business, and destroys those who treat it as a game. Your greatest enemy is not the market, it's your own mind. The market merely reflects what's already inside you, your fear, your greed, your hope, your impatience. Every tick, every swing, every loss and gain is a mirror showing you who you truly are under pressure. Most traders spend years studying charts and systems, but very few spend time studying themselves. Yet, until you conquer your own emotions, no method in the world will save you. I learned this lesson not from books or mentors, but from pain. The kind that empties your pockets and humbles your soul. Fear is the first enemy. It sneaks in quietly, disguised as caution, and paralyzes you when you should act. Fear makes you sell winners too soon because you're afraid to lose what little you've gained. It whispers that profit might vanish, that safety lies in taking something now, even if it's small. And so, traders cut their winners short and let their losers grow. Fear convinces them they're being smart when they're really surrendering. I've seen men sell stocks rising strong because they wanted to lock in gains, only to watch those same stocks double while they stood aside, filled with regret. But fear doesn't stop there. It grows. It infects every decision until you no longer trade to win, you trade not to lose. The moment you play defense against your own doubts, the market already has you. Then comes greed. Greed is louder, more seductive, more dangerous. It makes you forget logic. It makes you forget rules. When greed takes over, you see only what you want to see. The trader under greed believes he is invincible. He adds to positions without reason, holds profits long past their peak, and chases moves already gone. Greed feeds the illusion that success today guarantees success tomorrow. I have watched traders turn small fortunes into dust because they couldn't stop pressing their luck. They forgot that the same market that lifts you can crush you without warning. The moment you think the rules don't apply to you anymore, you're already finished. Hope is the cruelest illusion of all. It masquerades as optimism, as faith, but in trading, hope is poison. Hope keeps you holding losing positions, telling yourself that the market will turn, that it has to come back. Hope is the refusal to accept that you were wrong. It's emotional denial dressed as confidence. I once held a position far too long because I believed I could not be wrong. I watched the market fall point after point while I told myself it would recover. It didn't. The loss was catastrophic, but the true damage was internal. I realized I had been trading with emotion, not reason. From that moment, I learned when you find yourself hoping it's time to get out, the market doesn't care about your feelings. The only way to overcome these emotions is through discipline. A discipline so strong it feels like instinct. You must train your mind to follow rules even when your heart resists. Every great trader I've ever known had this one trait in common: the ability to act without emotion. They could cut a loss without hesitation, hold a winner without fear, and sit out of the market without boredom. They weren't cold or robotic, they were professional. They had learned that emotions and capital don't mix. Every time emotion entered their decisions, they paid a price for it. Discipline doesn't come naturally. It must be built through repetition and self-awareness. You must learn your weaknesses. Are you more driven by fear, greed, or impatience? Each trader has one dominant flaw. Identify it, acknowledge it, then design your system to protect you from yourself. If fear makes you exit early, use stop targets to stay disciplined. If greed makes you overtrade, limit your daily exposure. If hope keeps you holding losers, write down your exit plan before you enter. Rules are not restrictions, they are protection. The market's purpose is to expose your flaws. Your rules are the armor that keeps you alive while you work to correct them. The irony of trading psychology is that most people think it's about controlling the market. It isn't. It's about controlling yourself. The market doesn't test your intelligence. It tests your emotional stability. Two traders can look at the same chart and see completely different things. One sees opportunity, the other sees danger. The chart didn't change. Their minds did. The outcome of every trade is decided not by the data, but by the trader's state of mind when interpreting it. If you can remain calm while others panic, confident while others doubt, patient while others rush, you already have an advantage more valuable than any secret indicator. I have lived through panic, euphoria, and ruin. I have seen men break down when they could not bear the pressure of uncertainty. I have also seen quiet traders, unnoticed by the crowd, grow wealthy simply because they controlled themselves. They didn't have the best systems, they had the best temperament. The market rewards emotional mastery. It gives its fortune to the few who can stay objective while everyone else is drowning in emotion. To develop that mastery, you must detach. You cannot take losses personally. You cannot take wins as validation. You must see every trade as one decision among thousands. A probability, not a judgment of your worth. When you win, you don't celebrate. When you lose, you don't despair. You simply record the result, analyze it, and prepare for the next. The trader who stays emotionally even, no matter the outcome, becomes unstoppable. He doesn't ride the highs or lows, he stays on the steady ground of reason. The hardest moment for any trader comes after a string of success. That's when the ego begins to whisper that you've figured it all out. That's when discipline starts to fade, replaced by overconfidence. Success is the most dangerous phase because it tricks you into forgetting the lessons of loss. You start breaking rules, taking unnecessary risks, assuming you're smarter than the market. But the market has a way of humbling pride. Every time I thought I had conquered it, it reminded me that emotion never truly disappears. It only waits for weakness. The true professional is not emotionless but aware. He feels fear but doesn't obey it. He feels greed but doesn't act on it. He feels hope but doesn't depend on it. He acknowledges these forces and keeps them in check through structure. That is what separates the survivor from the speculator, the legend from the crowd. The market is not against you, it is indifferent to you. It will not adapt to your emotions. You must adapt to it. Control yourself before you try to control the outcome. Master your emotions, and you will see the market for what it truly is: not chaos, but rhythm. Not punishment, but reflection. Every swing of price reveals not the secrets of Wall Street, but the truth of human nature. And the trader who conquers his own mind has already conquered the market. Every trader learns the same lesson eventually, though most learn it too late. Cut your losses quickly, and let your profits run. It sounds simple, almost too simple to be the cornerstone of fortune, but it is. In those few words lies the entire difference between those who survive and those who perish in the market. I had to pay dearly to understand it. Every great loss I ever took began as a small one that I refused to accept. Every great profit I ever made came from the patience to hold on while others rushed for crumbs. The market rewards discipline, not stubbornness. It punishes hope and rewards respect for the truth as it unfolds through price. A losing trade does not hurt you, refusing to close it does. That is the mistake that kills most traders. They cannot bear to be wrong. Their pride ties them to a position that the market has already rejected. They start justifying it. It'll bounce. It's oversold. It can't go lower. But the market doesn't care what you think it can or can't do. The price is the verdict, and fighting that verdict is like arguing with gravity. When I was young, I used to average down, buying more as prices fell, convinced that I was getting a bargain. It always ended the same way, in disaster. The market does not reward defiance, it rewards adaptation. Once I learned to take a small loss without emotion, my entire career changed. Taking small losses is not weakness, it is strength. It is the act of a trader who understands that preservation comes before profit. The market is a battlefield and your capital is your ammunition. You cannot fight tomorrow's war if you waste all your bullets today trying to prove a point. Every dollar you lose unnecessarily is a dollar that won't be there when the real opportunity arrives. Traders who protect their capital survive long enough to get lucky. Those who don't are eliminated before luck ever has a chance. When a trade goes against you, the best decision is often the hardest. To close it, take the loss, and move on. That single act requires courage. Most people believe courage means holding on. It doesn't. Courage in trading means accepting defeat quickly, not letting pride keep you trapped in a losing position. I used to say, it's not the loss that breaks you, it's the refusal to take it. The moment you start rationalizing a losing trade, you're no longer trading, you're hoping. And hope is not a strategy. On the other hand, when a trade moves in your favor, that's when patience must replace fear. Most traders sabotage themselves by taking profits too soon. The moment they see green, they rush to cash in, terrified that the market will take it away. That's fear again, the mirror image of the same weakness that keeps others holding losers. A good trade, one that truly aligns with the market's momentum, can grow beyond imagination if given time. But few ever allow it. They pluck profits early, taking a small win and missing the great move. Then they watch the market continue without them and wonder why they never seem to catch the big swings. It's because they never gave their trades room to breathe. A market trend is like a wave. You cannot predict it, but once you're in it, your only job is to ride it as long as it carries you. Don't jump off at the first ripple. Let it lift you. When I caught great trends like the market breaks in 1907 and 1929, I didn't make money because I predicted perfectly. I made money because I stayed in. The profits came from sitting tight, not from constant action. When the tide is moving in your favor, patience becomes your ally. You can't force big profits, but you can destroy them by acting too soon. To cut losses and let winners run requires one thing above all: emotional control. You must detach from the outcome. You must treat each trade as a probability, not a verdict on your intelligence or worth. The market doesn't know who you are. It doesn't reward cleverness or punish mistakes. It simply responds to behavior. If you cut losses quickly, the market spares you. If you let winners run, it rewards you. The math is simple: small losses and large gains make a trader rich. But the mind resists that logic because the mind hates pain and loves certainty. That's why most traders do the opposite. They hold losers to avoid pain and take small profits to secure comfort. It feels good in the moment, but guarantees ruin in the long run. You must train yourself to think opposite of the crowd. When the market proves you wrong, admit it faster than anyone else. When it proves you right, have the patience to let it reward you fully. That reversal of instinct is what separates professionals from amateurs. Every professional trader is quick to take a loss and slow to take a profit. Every amateur is quick to take a profit and slow to take a loss. It's a mirror image, one that defines who survives and who doesn't. The reason this principle never changes is because human nature never changes. 100 years ago, men stood on trading floors feeling the same emotions traders feel today behind screens. Fear, greed, pride, these are constants. Technology changes, but the psychology of loss and gain remains the same. The trader who conquers those instincts doesn't need to predict the market. He only needs to react correctly. When a stock moves against you, don't argue. The market is always right. Accept the verdict and pay the small fee for your mistake. Think of it as rent, the cost of staying in business. Every small loss you take keeps you in the game. Every large loss threatens to end it. You will never be right all the time. Even the best traders lose often. The difference is they lose small and win big. They manage risk as an operating expense, not as a personal failure. Once you cut losses without hesitation, something powerful happens. You stop fearing the market. You become calm, methodical. You no longer chase or cling. You trade cleanly because you know that any single trade means nothing in the grand scheme. Your job is not to be perfect, it's to survive long enough for your edge to express itself over time. The greatest trades I ever made came from patience after the hardest losses I ever took. Each time I was burned by holding too long, the market taught me again that humility is strength. To survive in this business, you must be humble enough to take small losses and strong enough to let profits grow without fear. The market is not a place of perfection. It's a place of discipline. Your edge is not in prediction. It's in reaction. Cut losses quickly. Let profits run. Do that and you will not need to be a genius. You only need to be consistent. The trader who obeys that simple law will outlast the clever ones, outgrow the reckless ones, and one day, quietly, become one of the few who truly win. There are only a few truths in this business, and they never age. The market has changed its tools, its speed, its technology, but not its nature. The same patterns that ruled in my day still rule yours. The same emotions that destroyed traders in 1907 destroy them now. You can dress the market in algorithms and automation, but beneath the numbers it remains a theater of human behavior, driven by greed, fear, hope, and impatience. To succeed, you must live by principles that time cannot corrode. These are not strategies, they are foundations. Without them, no method can stand. Trade only when the odds are in your favor. That was my first and most sacred rule. The market offers thousands of opportunities every day, but only a handful are worth taking. Most traders drown in noise because they cannot resist the temptation to act. They mistake motion for progress, just as gamblers mistake luck for skill. But trading is not about constant activity, it's about selective aggression. You must wait for those moments when everything aligns: price, volume, trend, and timing. Only then do you strike. Every trade you take without clear alignment is a confession that you're trading emotion, not logic. The market punishes impatience with precision. The crowd acts on impulse, the professional acts on probability. The second principle is to stay out when the market is unclear. There is no shame in doing nothing. The market doesn't pay you by the hour. It pays you for correctness. Some of my greatest trades were made by sitting out when others were frantically chasing moves. The hardest thing to do as a trader is to wait without losing confidence, to watch the market move without feeling left behind. Yet that patience is what keeps you alive long enough to be present when the real opportunity arrives. I often said, there's a time to go long, a time to go short, and a time to go fishing. Knowing when to stay out is just as important as knowing when to enter. The discipline to stay still when the market is confusing is the mark of maturity. Most traders fall because they must always be doing something. They cannot bear stillness, but stillness is where clarity is born. The third principle is to protect your capital at all costs. Capital is the oxygen of a trader. Without it, you can't breathe. Without it, even the best ideas die. The market will always give you another chance if you're still standing, but if you lose your capital, you lose your place at the table. Risk management is not an accessory to trading, it is trading. I learned that lesson through the agony of ruin. I made fortunes, and I lost them, not because the market was cruel, but because I forgot to protect what I had earned. You must approach every trade with humility, assuming that you could be wrong. Decide before you enter how much you are willing to lose and never exceed that limit. The trader who defends his capital like a fortress survives long enough to grow wealthy. The one who risks it carelessly becomes another forgotten name in the ticker's endless roll call of failure. The fourth principle is to study the past. The market is new in appearance but ancient in behavior. Human nature does not evolve with technology. The same emotions that moved prices a century ago move them today. When I studied charts by hand, I wasn't just looking for patterns in price. I was studying patterns in people. The market is a collective mind, and that mind repeats itself endlessly. History is the only true teacher. Every panic, every rally, every crash is just an echo of what has already happened. Study the great bull markets, the devastating collapses, the behavior of the crowd at each turning point, and you will see the same rhythm repeated again and again. The trader who understands history can see the future, not because he predicts it, but because he recognizes it when it appears. In all my years, I never met a trader who failed because he lacked information. They failed because they lacked discipline. The rules are simple, painfully simple, but following them is the hardest task in the world. The problem is not knowledge, it's emotion. Everyone knows they should cut losses and ride winners, but few can do it. Everyone knows they should wait for the right setup, but few can resist the temptation to act. The market is not a puzzle to be solved. It's a mirror reflecting your patience and your control. The principles never change because human weakness never changes. The crowd will always chase, panic, overstay, and overreact. The trader who understands this has an advantage that no algorithm can replace. The faces change, the technology evolves, but the crowd's behavior is eternal. In my time, it was men shouting orders on the exchange floor. In yours, it's data flashing across screens. But the emotion behind every order, that's the constant. Every panic has the same heartbeat. Every bubble hums with the same reckless optimism. If you strip away the headlines and the context, you could swap the dates on 100 different market charts from different eras, and no one could tell the difference. That is why principles outlive generations, because they are based on human nature itself. The market is an arena for character. Strategy gets you started, but temperament keeps you standing. The trader who has principles stands on solid ground no matter what storm comes. The one without them is tossed by every wave of emotion. There will always be times when you doubt yourself, when the market feels uncertain, when your conviction is tested. In those moments, you must fall back on your rules, not your feelings. The market has destroyed men far smarter than you or me because intelligence alone is not enough. Without principles, intellect becomes vanity. With principles, intellect becomes power. I made fortunes not because I was always right, but because I learned how to survive when I was wrong. Every rule I lived by was written in loss, carved out of mistakes. I've seen markets crash. I've seen them soar, and I've seen the same mistakes repeated by every new generation that thought it was different. But the truth never changes. The market does not reward brilliance, it rewards consistency. It does not honor confidence, it honors discipline. It does not favor the loud, it favors the patient. Remember this, the market is timeless, but so is wisdom. If you understand that price reflects emotion, that risk must come before reward, that waiting is strength, and that protection is victory, then you possess the keys that outlast centuries. Those are the eternal rules. They are not mine nor yours. They belong to the market itself. The trader who honors them becomes part of its rhythm. The trader who ignores them is eventually consumed by it. The principles never die, only the traders who do not follow them.